All right, let's dive deep today, huh? We're going to explore this whole diamond hands thing in investing.
Especially with, all this talk about a potential
The
MOASS.
mother of all short squeezes.
Right.
You guys sent in a ton of stuff.
Yeah, articles, analysis of past squeezes, even some pretty passionate discussions from online communities.
So we're here to help you break it all down.
Get a good grasp on what this whole investing phenomenon is all about.
Not financial advice, of course,
But more like a foundation.
so you can understand what's going on.
Make some informed decisions.
So I gotta say, this whole diamond hands thing, it's become more than just like a meme, you know?
Yeah, it's almost an investing philosophy at this point.
It is. And it's interesting because it's not just about holding on to something.
It's like you really believe in it.
Right. You're convinced about its value.
And you're not going to let, market manipulation tactics scare you off.
It's almost like you're turning into a diamond,
Yeah.
forged under pressure. Exactly. That's a great analogy. So how does this all tie into the MOAS?
This massive short squeeze everyone's talking about.
You sent over some pretty fascinating research on that.
Yeah. To understand the connection, we really need to break down how a short squeeze even works.
Okay, so let's do that. Take us through it.
So imagine someone borrows, say, a stock, hoping the price will go down.
Okay.
Then they sell it, right? Planning to buy it back later when it's cheaper.
And the difference is their profit.
Exactly. That's short selling, basically.
All right, so that's how shorting works. But how does that turn into a squeeze?
So the squeeze happens when the short sellers have to buy back those shares.
Not because the price is dropping,
Right, but because it's going up rapidly.
and then all that buying just pushes the price even higher.
It creates this crazy feedback loop, and
Yeah.
that can lead to pretty insane gains.
And remind me, you mentioned the Volkswagen thing back in 2008.
Oh, yeah, that was a wild one.
That was a pretty dramatic example, right?
It really was. I mean, for a bit there, Volkswagen was the most valuable company in the world,
Because of a short squeeze.
just from this massive short squeeze.
Wow. So that really shows the power of these events.
The power and the volatility, they can be unpredictable.
So, okay, let's bring it back to diamond hands.
Hmm.
If a MOAS were to happen, the whole idea is to hold tight, right?
Even when the price is going crazy.
You're basically riding the wave of this potential squeeze.
Exactly. And the thought is that, by holding strong, investors could see some unprecedented gains.
You also sent over this document, the Diamond Hands Playbook. What is that exactly?
Oh, yeah. So think of it as a guide to navigating a massive squeeze.
Like the MOAS.
Right. It's about, mental toughness, planning, and managing risk.
Which makes sense,
Mm.
because we got to talk about the emotional roller coaster.
Oh, yeah,
We'll definitely dig into that playbook.
definitely.
But first, there's this other concept that I found super interesting, the infinity pool theory.
It does sound a bit science fiction-y, doesn't it?
Yeah. Tell me more about it.
So the theory is that if enough people directly register their shares,
Take them out of the usual brokerage system.
right, the number of shares available for trading could basically shrink way down.
And how does that relate to the whole MOAS and the Diamond Hands approach?
Well, if there's not many shares left to buy and a ton of short sellers suddenly have to cover their positions,
You have to buy those shares back, no matter the price.
the price could, theoretically,
It goes to infinity. Is that even possible?
that's the theoretical idea behind this infinity pool.
It's a mind-blowing concept.
It is. Of course, it's all very speculative.
For sure.
But it does raise the question of what happens when you combine direct registration,
DRS.
yeah, DRS, with a huge number of people who just refuse to sell.
Then the price becomes, what, unpredictable?
Pretty much.
So combining that infinity pool idea with a diamond hands philosophy.
It suggests that those who hold on tight through a squeeze could see some astronomical returns.
But wouldn't the pressure to sell be intense? Everyone likes to make money, right?
Oh, absolutely. And that's where the psychology of it all comes in.
Right. You have to factor in things like FOMO.
Fear of missing out.
Exactly. And the herd mentality.
Yeah, that can really drive market behavior.
So how does the Diamond Hands playbook address that psychological element?
You mentioned mental resilience earlier.
Yeah. What does that even mean in this situation?
It means being able to handle the pressure, manage your stress, not make impulsive decisions based on fear or greed.
Gotcha.
The playbook suggests techniques like meditation, journaling, and setting clear exit points ahead of time.
Exit point. So that's like deciding beforehand when you're thinking clearly at what price you might sell some of your holdings.
Exactly.
But wouldn't that kind of contradict the whole holding no matter what idea? Yeah.
It's about finding a balance, really. Conviction, but also being pragmatic. Having a plan can help you avoid those emotional decisions in the heat of the moment.
That makes sense. But what about the risks of this whole approach? Is it just riding the wave, or is there a chance of getting wiped out?
We definitely need to talk about those risks. No investment strategy is perfect.
All right, so let's get into that. But first, let's just recap what we've talked about. We covered diamond hands, the mechanics of a short squeeze, and that infinity pool theory. And we touched on the psychology involved, the need to be strategic. Now let's explore those potential risks and how to navigate them.
So yeah, we've talked about the potential upside, especially with a narrow S. But like you said, got to look at the risks too.
Right, every strategy has its downsides. What are we looking at here?
Well, I think one of the big ones is market manipulation.
Oh, right. Like, even if you believe in the asset.
Exactly. You could have powerful players trying to influence the price.
To trigger a sell-off.
Exactly. And then diamond hands investors are left holding the bag.
So you got to be aware of that.
Definitely. And then there's the liquidity thing.
Ah, right. During a squeeze, it might be hard to sell quickly.
Especially if the price is jumping all over the place.
Everyone wants out at the same time.
Yeah. Creates a bottleneck.
Makes sense.
Even if you're in it for the long haul.
You're thinking long-term.
There's always that risk. The company itself could face problems.
Affecting the share price, squeeze or no squeeze.
Exactly. It's not just about the squeeze.
It's about the fundamentals of the company.
And, we can't forget the psychological impact.
Holding through all that volatility.
It can be super stressful. It's like a roller coaster.
That's why the Diamond Hands playbook emphasizes mental resilience.
It does.
So, what are some specific strategies from the playbook to deal with that? How do you manage the risk?
Well, like we touched on earlier, setting clear exit points.
So deciding beforehand when you might sell.
Before things get too crazy, you're thinking rationally.
So it's not about holding every share no matter what.
It's about having a plan.
Taking some profits along the way.
Managing that risk.
Finding that balance.
Conviction, but also being pragmatic.
Right.
Diversifying your portfolio is also huge.
Don't put all your eggs in one basket. Classic advice.
It's classic for a reason. Spread that risk.
Makes sense.
And of course, do your own research.
Don't just follow the hype.
Exactly. Dig into the company's financials. Understand their business.
Form your own opinion.
Be an active investor, not just caught up in the frenzy.
Right. Make informed decisions.
And remember, investing should align with your goals, your risk tolerance.
Yeah, if Diamond Hands feels too risky.
Or too stressful.
It might not be for you.
Find what works for you.
We keep coming back to GameStop.
It's the poster child for this whole thing.
It really is. And you sent over some news about them becoming a holding company.
Under Ian Cohen.
Yeah. How does that fit into this?
Well, it's interesting, right? They're building up cash, forming an investment committee, partnering with RC Ventures.
Sounds like a long-term play.
It does. Very value-oriented.
Like they're mirroring the Diamond Hands philosophy.
You could say that. Betting on the long game.
Trying to create value for shareholders.
It's a whole other layer to the Diamond Hand story.
It's not just individual investors.
The company's getting in on it, too.
We focused a lot on the practical side.
The strategy.
But there's a philosophical side to this, too.
There is.
Like this idea that a group of people with a shared belief can challenge the system.
It's a powerful narrative.
We've seen hints of it.
The rise of retail investors.
Making their voices heard.
It's fascinating.
Diamond Hands is almost a movement.
In a way, it is. Pushing back against perceived unfair practices.
Wanting more transparency.
Accountability.
Yeah.
It raises questions about the future of finance.
Big questions.
What if this keeps gaining momentum?
Could we see a more democratized system?
A decentralized system.
That's a radical thought.
It is. But it's exciting to think about.
The potential for change.
And it shows how important education is.
Informed decision-making.
The more people understand investing, the more power they have.
To participate.
To shape the future.
So we've covered the risks, the rewards,
Psychology.
the strategy.
Even the bigger implications.
But what about the MOAS itself?
What would it actually look like?
That's the million-dollar question.
And we can't predict the future.
But we can look at the past.
We can.
Study those past squeezes.
See how they unfolded.
What made them so intense?
What lessons can we learn?
Okay, let's do that. Let's dive into some history.
So, like we were saying, we can't predict the future.
Right.
But looking back at some past squeezes.
Yeah, let's do that.
Can give us some clues.
Give us an idea of what might happen.
One that comes to mind, the Volkswagen squeeze back in 2008.
Oh, yeah, that was a big one.
Porsche had been quietly buying up a ton of Volkswagen stock.
Sneaky, sneaky.
Right. And then, boom, they announced their intentions.
And all those short sellers panicked,
They had to cover their positions fast,
triggering a massive buying frenzy.
driving the price through the roof.
Volkswagen became the world's most valuable company for a little while.
It did. It shows you how quickly things can change.
And how unprepared those short sellers were.
They got caught off guard big time.
That's a pretty wild example. What other squeezes are out there?
Well, there's Overstock.com back in 2007.
Oh, yeah.
That was interesting because it was one of the first times we saw retail investors using online forums to coordinate.
To, like, gang up on the short sellers.
Basically, they put a ton of pressure on them.
So this was like an early version of what we're seeing now.
Yeah, you could say that. It was a sign of things to come.
This whole diamond hands movement.
And the Overstock squeeze showed that even without a ton of money,
Yeah, like the big institutions.
retail investors could make a real impact,
It's fascinating how technology has changed things.
given people a voice.
Empowered them.
Definitely. And these historical squeezes, they give us valuable lessons.
About the power of these events
The volatility,
and what causes them.
the short interest, the liquidity, the overall market sentiment.
So if we think about the MOS, what are the key takeaways?
First, you got to understand the risks.
Right, it's not a guaranteed win.
Even a huge squeeze, prices can swing wildly.
And you could lose money.
It's possible.
So that's where the mental game comes in.
Being prepared, having a strategy.
The diamond hands playbook.
Exactly. Setting those exit points, managing your risk, staying informed.
Being ready for anything.
Exactly. The good and the bad.
And remembering, no one can predict the future,
Nope.
even with all the analysis in the world.
There's always uncertainty
So make informed decisions,
with the information you have.
but be ready to adapt.
Things change fast.
That's a key lesson from these squeezes.
The market is unpredictable, full of surprises.
Well, we've covered a lot today.
We have
Diamond hands, short squeezes, the MOAS,
the history.
strategy.
It's a lot to take in
But hopefully you, our listener, have a better understanding now.
of this whole phenomenon.
And remember, knowledge is power.
It is
The more you know, the better decisions you can make.
to reach your financial goals.
So keep learning, keep exploring.
And as always, invest wisely.
Thanks for joining us on this deep dive.
It's been a pleasure.
We'll see you next time.
Until then, stay curious, stay informed.
And keep those diamond hands strong.